Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss the latest tariff threats coming out of the White House and the implications of these threats on the market. As well as that, I want to talk about, as the week comes to an end, how one asset has not been very favorable, where two other assets have been very popular indeed to investors this week. As well as that, we'll discuss what we have lined up next week. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, indeedy, Trump today tweeted, or it's not, doesn't tweet, posted, I guess it's called, on his social truth media, a threat to Apple. Because this is what he had to basically say. He tweeted this. He's basically threatened to put 25% tariff on Apple products unless iPhones are manufactured in the United States. Now, here's the thing. He's often made threats to companies, US companies in particular, which we'll talk a bit more about that in a moment. But this is the first time he's actually singled out a company and actually threatened to put an actual tariff on the company. This is what he had to say. This is what he said. I have long ago informed Tim Cook, obviously he's the CEO of Apple, that I expect their iPhones will be sold. So I'll start that sentence again. I long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the United States will be manufactured and built in the United States, not India, not any place. He just went on to say this. If this is not the case, a tariff of at least 25% must be paid by Apple to the US. So again, he's singling out the company and actually threatening them. Why don't? Unfortunately, I don't speak Arabic. I do apologize. I only speak English, I'm afraid. So this is an English speaking show, so I do apologize about that. But thank you for coming, and very nice to meet you. Nice to meet you, sir. So yeah, it's the first time he's actually singled out an actual tariff on an actual company. Now, this is all down to the fact that Apple CEO Tim Cook has considered moving iPhone manufacturing to India in response to Trump's tariffs on China. So he has considered that. So this is where this all comes down to, is the fact that Tim Cook is looking to do that. I can't speak Arabic, unfortunately. I do apologize. I am sorry. I can only speak English. I do apologize. But nice to meet you all the same. Thanks for your hard work. I really appreciate that. My apologies. We do have an Arabic channel as well. So please check that out as well. So we do have that. But this is the English speaking show. So I do apologize. But thank you very much for coming along all the same. I hope you found some of the stuff I've said interesting anyway. Or understood what I've said anyway, found it interesting. Now, obviously, Tim Cook has looked at doing this because obviously, at that point, there was 145% tariffs on China. It's still now down to 30%, so it's still tariffs. So he is looking to India. But like I say, this is not the first time Trump has gone after a company, but this is the first time that he has told the company will pay. He's saying the company doesn't pay on the tariffs to the customer. They say the company will pay, but Apple will pay 25% tariff if they don't make their iPhones. It's the first time he's done this, but because he has come out several times to attack companies, who have dared to say they will have to increase prices or have compared prices before tariffs and after tariffs. Like Walmart, they said last week after their earnings report, they will have to raise prices in May. Even if tariffs are 30%, it's still going to cost them more for their supply chain. And Amazon, like I say, they put the combination of the tariff price and before tariff price. Trump does not like this. He does not like this. He doesn't like the companies being open and honest about who pays the tariffs. He's thinking the companies will pay it, or the countries in question where the goods come from will pay it. That doesn't work like that. The importer who brings the stuff in, they pay it. They pay the tariff, which then, because it's more expensive for them, they have to pass the cost on to the consumer. Trump does not like saying that or letting that know. And if anybody says it, he gets very upset. Now, it's not quite sure if this approach to Apple is legal, if he can actually do it. You know, it's very unclear whether Trump can target individual companies with tariffs. But like I've said, in recent days, or weeks even, Trump has verbally attacked several US companies. Like I said, both Walmart, Amazon, Mattel being another one, a toy manufacturer, who again talked about prices and how it's going to be affected by tariffs, being honest. He's attacked a lot of American corporations. But to be honest, he's having a field day today. He's having a really good day today. He's got a spring in his step, because it's not just Apple he's threatened today. Not just Apple. Oh no. He's actually threatened the European Union with tariff hikes as trade talks have stalled. So, he's got the wind in his sail today in relation to these tariffs, because basically he's also, again, on Truth Social, whatever it's called, his version of Twitter or X, whatever you call it. He also posted out today that a straight 50% tariff will be put on the EU beginning on June the 1st. Now, you've got to remember, okay, we've currently got a 90-day delay on reciprocal tariffs, okay, which expires on the 9th of July. So we've got 9th of July to organize some trade deals, but he's not happy with negotiations at the moment or how it's going. So basically, he's saying, forget the 90-day delay, forget all about that. We're going to put 50% on the EU starting on the 1st of June, which is only just over a week away. Now, the EU did yesterday, we discussed this in yesterday's program as well. The EU did yesterday say that they offered another sort of trade deal type recommendation to the US. And there was a lot of focus, like a sweetener, try and get the deal with the US over the line, focused on US lobsters, okay? With the actual party still saying, well, all the US lobsters you sell to us, we won't charge any tariffs on that. And the EU have not held back. I've said as well, they are prepared, if necessary, okay, to do their own retaliatory tariff. Okay, they've already got their own plan to sort of strike back against Trump and Trump's administration with tariffs on 108 billion worth of US goods. So this is really beginning to heat up the trade negotiations between the US and the EU. It's proving to be quite a hot potato. It's proving to be very, very tight. And I've always said this, that, okay, out of all the sort of continental countries, he does seem to have a real problem with the EU. He has said before in press conferences that the EU was designed to destroy America. So he does have quite a personal thing with the EU. Well, that's certainly how he comes across when he says stuff. So anyway, that again has really put, the cat amongst the pigeons. for lack of a better saying, because again, these threats come on a week where the market mood is pretty negative as it is. It's pretty negative as it is, because don't forget, we started off the week with bad news, with Moody's downgrading United States credit rating down from AAA down to AA1. Okay, now don't forget the AAA is a high standard. And don't forget, they did this, or they warned this, because of the ever-increasing US debt. And there was something else then, which then followed that on, of course, which has also got the market very in a very bad place, or negative place. And that, of course, was Trump's beautiful, beautiful tax bill is getting one step closer to being law. Don't forget, the House yesterday just voted to pass it. 215 votes for yes, 214 votes for no. So it was very, very tight. Now, don't forget, this new bill, it is generally concerned, or the market's generally concerned, that this new bill will add about $4 trillion over the next couple of years to US debt. The US debt is already increasing massively. Add another $4 trillion to that. And like I say, Moody's downgraded the US because of this increasing debt. So what does that mean to the market? What does that mean to the market? Well, basically, it means that we are looking at weekly losses. Certainly with the S&P, looks like to close of a week with losses, and so is stocks. But there's something else which has got the attention of the market. That's right. With all this little bit of doom and gloom and a bit of concern with the market at the moment, the market has turned to gold and Bitcoin. Now, whereas the market is looking to close a week with losses, gold and Bitcoin are looking to close the week with gains. So let's have a quick look at gold and Bitcoin. And in about just over a minute, the US market will open, so we can then look at that as well. Let's have a look at gold and Bitcoin first and get that up and running. Okie dokie. Right, so first off, starting off with gold, of course, because of obviously the uncertainty in the market, the negative feel, and not helped by recent comments over the last couple of hours from Trump, gold has now got its safe haven status back this week. Currently trading around $3,051. And as you can see for the day, it's still way above that potential trend line, still holding way, way, way above that. So yeah, it's still extremely attractive to the number of investors at the moment, mainly down because of its safe haven status. But at all, like I said before, like I said yesterday, I am a bit of a gold bull, because I'm often am, because I love gold. I love gold. However, I am a bit worried about this being potentially a double top. But as we can see for the week, it is definitely closing with gains this week. So good for gold. The other success story, obviously, this week, of course, as well, which the market has turned to and looked at, which, of course, is Bitcoin. Bitcoin went way above 100,000 again, slightly down, a bit about a profit taking on that, obviously. You hit an all-time high, a new all-time high of 111,000. Now, of course, this is being driven several reasons. A, the market looking for alternatives to invest in. And secondly, on Monday as well, the Senate did a vote about a bill looking into making regulations slightly easier for stable cryptocurrencies, such as Bitcoin. So that greatly did indeed benefit the crypto bulls this week as well. Now, of course, excellent. The market is now open as well. So let's have a quick look, see how the market is fashioning. First of all, S&P 500. You can see this negative impact of these tariff threats. It was in a bad place already. Anyway, S&P's open with a gap, negative for the day at the moment, negative 1.6%. 17%. NASDAQ 100 again as well, open lower with a gap, negative 1.57%. The Dow, again, down, negative 1.26%, negative 128 points. Let's have a look at Apple, see how Apple has done after those 25% tariff threats. Tariff opened massively with a gap, negative 2.71%. Let's have a look at all the Mag 7. Tesla, negative 185%. Meta, negative 1.82%. Microsoft, negative 1.21%. Amazon, negative 2.08%. So you can see NVIDIA as well, negative 2.46%. NVIDIA actually, just, what I remember, it's going to be a big week for NVIDIA next week because we have the earnings report. So that's going to be a big thing. So I'll probably be definitely looking and talking more about that later or next week for sure. Alphabet's the same, negative 1.05%. Let's look at some European stocks after Trump's 50% tariff threats. DAX, negative 2.03%. Though it's not part of Europe, but it is in Europe, but not part of the EU. FTSE, UK 100, still also down, negative 0.66%, but not as frightening as the DAX. Okie doke. Don't forget, like I said, this is a live show. And I know, unfortunately, I do only speak English. But if you do have any questions, then please, ask me. It is live. And as well as that, I like to hear your opinions too. And let me know what you think about the market, what your opinion, what you're trading. Are you a gold bug like me? Now, what do you think of these tariffs, these threats we're getting today? What do you think of the US debt ceiling? Let me know your opinion, what you think and what you're trading. It is a live show, and the whole point is us chatting and talking and getting to know each other and sharing ideas for everybody to see. So that's always a good idea. Okie dokie. I think up next, let's do a currency update. Right, let's do a currency update as well, because it's not just the markets having a bad week. Oh, no, not just the markets. The greenback, US dollar, is also under pressure as well. And we can see this as the euro for a short period of time, actually skyrocketed to 113.7. It's still trading at 1.13. And if we have a look on a slightly bigger picture on the euro, okay, look on it on on a monthly. As you can see, we're now trading highest level really since September 2021. This is quite interesting as well, because I remember at the beginning of the year, a lot of analysts were saying that the euro may go to parity again this year, but by the looks of it, it's certainly not happening. So yeah, weaker dollar. A pound as well. That's hit a yearly high. Actually, it's trading very, very strongly. It's trading at currently at 134.99 against the greenback. So we are trading around a yearly high on sterling on the cable, and we can really tell by a weak dollar, obviously, because the dollar index is once again dropped under 100 points. So yeah, weaker dollar for our, for our currency, all the majors, so weaker greenback. We want to have a quick talk about what's happening next week, because next week is a pretty big week as well. We have FOMC minutes, US GDP, German retail sales, German CPI, and US PCE. Now, the two in particular I'm going to focus on is the FOMC minutes and see if the Fed drops any hints of their feelings currently of the economic climate and whether we could see a rate cut in June, and US PCE, because that's a key inflation indicator. So that's going to prove to be really interesting as well. Don't forget, like I say, you can ask me questions anytime you like, especially if you watch me on YouTube. As well as that, like I say, if you are watching me on YouTube and you quite like this sort of thing, subscribe if you like. Hit the notification button so you know next time I'm going live, which I go live every day. So hit that. And if you quite like what I do and you put up with me, then give me one of these. It's nice to know that you like what I do. As well as that, of course, I do notice a lot of people go back and watch the recordings, which is fantastic, which is great. And if you are watching the recording, not watching it live, and you have a question or you have a comment, put it in the comment section below. I will see it and I will answer that question next time I'll go live on air, which of course will be Monday when I'm back. And let's see what Monday brings us. Okie dokie. As well as that, is one other point as well, of course. If you're not a member or part of the OneRoyal family and you're more interested to know a little bit more about us, there is, of course, a link at the top and the description below. So please feel free to check us out. Okie dokie. If there is no questions, not a problem. Not a problem. Leave me to say then, till next time. Remember, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.